Hi everybody, this is Gary Deal Sentiment Timing, and this is our free weekly video report for Tuesday, December 8th, 2015. So last week, I had left you with that we had some bearish divergences, we were at resistance, we had high sentiment, and really I was leaning towards the towards the short side, and there was other reasons that were, I was looking for that, and I'll go over that in the report tonight. And I sent out some, some free alerts to you guys. They're a little delayed, but I have to do that because we have paying members, and we're a business. We give these updates out, but we can't give them the same time as our paying members. But we just really want to give you an idea of how we look at the market and how we manage it. So, we give you some clues, and they've, each one, this was when I was saying that we had the bearish divergences. This, we had the 93% bullish. The S&P dropped 55 points. Then we had the 5% bullish, and the S&P rallied 40 points that Friday. So, we're giving you these clues, but we're not, we can't give them to you at the same time that we're giving our free members, just because we're a business. So let's get started. At Sentiment Timing, we believe that human beings and the markets are irrational, and there's always an irrational element at work, and that is what creates market opportunities. Now, we find these opportunities through Woody Dorsey's proprietary sentiment database, as well as his trend duration technical timing indicators, and then we combine that with regular technical analysis to determine where we're looking for the markets to reverse. So we're not all about okay, the market's going to turn on this exact date, and even though it happens often, our whole service more about is it keeping you safe? Is it safe to be buying? Should you be selling? Or keep a neutral basis, and that is, with the information and everything that we have with Woody's, sentiment and his trend duration stuff, nobody else is able to offer this. So it's even if a turn date doesn't work out on that particular time, if sentiment is high and we have bearish divergences, guess what? It's not safe to be buying. It's just a matter of when is it going to turn, and it goes the same way if we are looking on the upside. If we have bullish divergences and sentiment is really low, guess what? It's really not safe to be shorting that decline right there. And that's really what the primary thing that you get is, is it safe to be buying? Should you be shorting, or just keeping a neutral stand? And really the main thing we look at it is time, and that's, when to expect these reversals, and that's through the trend duration analysis that Woody does for the technical turn dates. Sentiment, how traders are feeling about the market, and price, where do we have technical divergences that are supporting where sentiment is and when the turn is, and that's what gives us where to look at things. So being able to know where the general say feeling is about the market. If we have this euphoria, you don't want to be buying here, especially when there's divergences, and you don't want to be shorting when we have capitulation and everybody's selling. So it's very simple when you just look at a graph like this, that, okay, well, yeah, I don't want to be buying into euphoria or selling into capitulation, but how do you know where we are in the time frame of it if you don't have sentiment information? And like I said, there's other sentiment data sources out there, but they're not the same that Woody has. He's been compiling this information for 40 years from the same sources, and why his sentiment is a lot more accurate than any other one out there. So this is the current sentiment reading. We had a 2% yesterday, but what I want to show you real quick is, notice the red line and the green line. So what we have is both price support, price resistance, along with sentiment resistance, sentiment support. So once the S&P broke above this going into October, it broke out of this congestion line. So everybody that was bearish down here now had to get bullish again. And now what's happening is we're forming another channel. And this one is different, much different than this, because notice how many extreme bullish and bearish readings we've had. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, and that's going just since the end of October. And you don't really see that often. And what's even crazier is that we're getting these on a daily basis now. You don't, if you go back and look, you don't see everybody bullish one day and everybody bearish, and this going on a daily basis. So what's happening is everything is coiling up, and there's going to be a big break. Now, which way it breaks, we have an idea. We know when to start looking for a low. But the thing is, from here, all of this, it's really coiling up, and there is going to be a big break. So you have to be pretty careful with things. But the main thing really is just knowing when to expect the turn, and that's, I've been saying this. When you follow sentiment and you know these turns, you can make trades with confidence. And this is just, I showed you what I did in November. I don't trade a lot. I don't put a lot of money into it. I just don't want to get, say, be a bias on one side. And if I had 100 contracts, trust me, I'm going to be biased on whatever side I have 100 contracts on. But I only do 10, so it's a small amount. But just from the December 1st to the 9th, I made 2,100, and I think it was another 1,900 a couple of weeks before. So like I said, it's small amounts that I'm doing. But the thing is, knowing where sentiment is, knowing where when to expect these turns, and being able to just look at where what the technical analysis is, it's pretty easy to make these trades. So why was I looking short? Well, for the main reason is that we knew to start looking short near to the Thanksgiving, and this is on November 19th. So we identified after Thanksgiving that it was going into the the 27th and the 1st, so that was it. But what my main reason was, Woody was expecting weakness due into December 7th, and now we have another turn date that's there. But this is the reason why. So it was very simple for me to every big rally that we got was to short it, and we got down, short it, and we came down, and I cover these. I don't hang on to them. It's just the way that I do things. But on the regular charts, you can see that we're trading within a massive, massive triangle right here. So there's a shot that we could see the S&P trade somewhere down into this 2040 level. But remember, we have this sentiment coiling up right here. So something is going to break. Now, if they get it through these levels, then most likely we're going to see a very quick move down to the sentiment support, which is at that 2020. So that would be a downside target. If we head down, we don't have any bullish divergences. And if we look at a 15-minute chart, you can see we're trading within a smaller triangle. So everything is coiling up right now. Being we hit the bottom of it, and I covered my shorts at the 2055 because we were at a 78% retracement. If we head up, I'm probably going to be shorting again someplace between the 2080 and the 2084. And I'll know if the S&P takes out the 2091, guess what? We're breaking out of this range right here, and I don't want to hold on to my short positions. So it makes things really easy if we head up short and just know the stop is going to be there, or maybe look to short again up here. But the thing is, knowing where sentiment, resistance, and support is makes things really, really easy. So right now I'm neutral. If we head up, I'd be looking someplace up into the 2085. If we head down, the 2040 level is going to be important. If they lose that, then we're going to see a move down to the 2020 in a really, really fast manner. So that's pretty much all I have for tonight. Again, if you're looking to start making trades with confidence, not jumping in and out of this market, with a trading secret that nobody else has except for Woody Dorsey, and it was considered one of the best market timers in the world for over 40 years. We've been doing fantastic right now, and I'm also offering that free membership to Markets Path. I just go over a technical aspect of things, but you get the full membership as long as you remain a member of Sentiment Timing. So until next week, have a great night, and good luck trading.